Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's keep up with the analysis of the euro currency. Actually, things that we have suggested recently in previous video mostly has been completed. So because you can see that on the daily chart we've got the grabber that we discussed, and we said that since we have a bit contradiction situation, as we have the patterns in both directions and all of them are valid, it would be better to get some more clarity. And bulls, for example, could watch for two moments. First of all, the market response on the hourly XOP target. We will talk about it a bit later. And on the daily chart, it is necessary to get the grabber. So at least this provides some background, some context that, well, still could be used for thinking about taking the long position. This is at least something that we could put in the back of the possible bullish trade. But today we have the complex of the new signs on the different markets that actually bring some clarity on the overall situation. First of all, you could see what is going on the Bitcoin. This is absolute madness. So you can see that market actually played back the whole downside action. So it was returned back to the point that was 2 days ago before the collapse has happened. Today I just thought that maybe it has been triggered by the Joe Biden. And he called about the emergency situation in the power supply in the United States. So maybe it just had been treated as some hazard for the minor business in the United States. Maybe that was the reason. But anyway, today market returns full rate back higher. On the performance of the Great British Pound, we also see some bullish signs. So recall what we said yesterday. If we would like to go long, it would be better to consider this ABCD pattern, because this is a really great point, to think about taking a long position. Maybe the butterfly might be formed. But instead of that, you can see market returns that back up. And actually, if you will take a look at the hourly chart, this head and shoulders has been failed. It's just why? Because market actually now stands already above this top, which is actually the foundation of all downward action. This is ABCD pattern. Now this ABCD pattern has been erased. Market was standing slightly below the neckline, returned at back up. This is, guys, the signs of the failure, which is potentially bullish. Finally, speaking purely and directly on the euro currency, we have some fundamental reasons. Of course, we do not know what the central bank will tell, but by the overall opinion, overall common view on the on expectations that we actually also provided in our weekly report, that markets actually expect two things: it's closing of the quantitative easing program in Europe, starting from the July, and announcement or really clear hint on a possible rate change in July as well. Yes, it will not be 25 points, maybe it will be 10, 15 points. But still, this is just moving out from the dead point, and that might be important. That also could provide support for the euro currency in the short term. So taking it all together, of course, you taking some risk that of the different uncertainty around central bank and other stuff. So we can't avoid it currently. And that's a decision stands upon you, that, well, whether we have enough context for taking the position or not. But I would say only simple thing concerning taking the long position currently on the EUR for a short-term trading. This is the best point to make the long trade, not because of it provides a guarantee that you will succeed, but it's just perfect placement from the technical point of view for a position taken. So take a look at the 4 time frame chart. Here we said about and talked about the potential butterfly that might be formed. We said let's keep an eye on what will happen around the XOP on intraday charts. Here we see that market was showing nice bullish upper direction, forming bullish engulfing pattern here. Yes, we have here a few minor grabbers. This is the risk. Some risk exists with these patterns, but currently it's difficult to say whether they work or not. And if in general upward direction continues, this butterfly might be the nearest target. So market simultaneously completes the XOP and completes the one already target of the butterfly. That might be triggered particularly by the central bank statement tomorrow. On the hour time frames, take a look also what we have. Market dropped, completed the XOP, and now showing 618 retracement. This is the best opportunity because you could take the position on the retracement after the starting of the rally and placing stop just below this area. Or maybe it makes sense if we are dealing with the butterfly, it makes sense to place stop below these lows, because this is an validation point of the butterfly. Besides, with the grabbers that we have, it might be just minor wash and rinse here, and if these lows will survive, the butterfly remains valid. And from that standpoint, maybe indeed it makes sense to place stop somewhere below this area. So for a long-term position taking, if you of course would like to be absolutely perfect, when in this case you could try to wait for performance of these grabbers. If market will start dropping here, you could control this and try and take position close to these lows. But currently, well, this just might not happen. And alternatively, you could split position for taking it gradually. First at this point right here, maybe later if the grabber starts to work on lower levels. This is just a few tactical problems that you probably will have to resolve by yourself. But current situation, current placement, it would be best placement for make decision on taking the long position. As I said, this is not it doesn't guarantee you that you will succeed, and that market indeed will keep going higher. But this is just technically a combination of risk-reward ratio here will be the best. That's why we're talking about this here. Now a few negative moments that we have. If you take a look at the other markets, corresponding markets, for instance on dollar index, we don't have any grabber here. And what is more interesting is that on the futures of the euro currency, we also do not have the grabber. This is well, this is really thing to worry about. That's the whole combination of the factors that we have currently. The question here is approximately 30 or 40 pips. And now, actually, we need to make the decision whether we're ready to risk for 35-40 pips for this trade, potential significant upward action here, with taking on the back some risk factors that we have. No grabber here, and on the 4 time frame chart we have also 2 bearish grabbers that potentially suggest that it might be downward action here. This is risk factors. What stands on the positive side, I wouldn't repeat again. So this is the combination that we have on the euro currency. And in general, guys, in performance of this head and shoulders, I would say that, well, it is not bearish. Its performance should be different. That should not be very slow downward action to the completing point of the hand and shoulders, especially when market stops above the neckline, haven't reached it, showing some bounce. This is a bit rational type of action for the hand shoulders pattern that increases chances that it might fail. So that's all actually.